M's and W's occurs frequently on the charts, but they are not all of them that works out. I'm sure you've actually tried to trade this particular pattern, but to see yourself losing frequently. So in this video, we'll learn on how to trade the rightful M's and W's with steps from how to attain market bias to actually catching the peaks. But before we go through, make sure you subscribe to this channel and check the notification bell icon so that you won't miss any of our videos. On top of that, we have a free Telegram channel where we share free signals, free advice, as well as setups. Make sure you check it. So the first topic is bias determination, which is one of the major or one of the most important parts of trading these M's and W's. So market bias is actually a process of acquiring the market direction. Is the market going up or is the market going down? So M's and W's to be traded must be in line with these market bias. If the market is actually going up or if the bias is down, we need to be looking for M's in that particular direction. Same as the W's, if the bias is going up, we need to look for W's like that. So market bias is done solely with counting of levels to acquire what we call peaks. Peaks are basically reversal points that are available on the charts. So for the purposes of this video, we are not going to delve deep in counting of levels, but I'm going to impart a skill that can help you acquire peaks with ease. So after peaks are obtained, M's and W's are located going away from those peaks. So if we say this is a valid peak or a valid reversal point, what we'll be looking for are now W's in this particular direction. Same as if we get a reversal peak, right, or a peak formation high, we'll be looking for M's away from this particular peak. So basically the first or fundamental step that you need to first take is to attain the bias, is the market going up or down by location of these peaks. So below is how M's and W's are located from peaks, right? So in this case, we have this setup. I've actually illustrated it. It will be on M15 time frame if it looks like this. So we call a day of rise a level, and if you want to learn more about levels, we have an advanced course that goes into depth on how to count these levels. So one H1 level or 1 day of rise, we expect to see 3 M15 levels or segments of that particular H1 level. So in this case, we have a peak formation, low, or peak reversal. We anticipate that the market was coming from this particular direction. So after completion of these three levels, a pattern will actually come as a reset of the M15 time frame. We'll actually illustrate more on the charts. So if you are not getting it right now, don't worry, we'll actually clear off that confusion. So we have 1 level, 2 levels, 3 levels, and as you can see, these patterns will be coming away from that particular peak. So the first important step is to identify this peak formation low or a peak reversal so that we attain the market bias. So let's now go over the charts for more examples, and before we do so, we have this market mega method course which actually covers all this, and it's going for $99. It will definitely help you in your trading. So this is pound against the dollar, and the first thing that we've said after being given any tradable asset is to find the buyers, and in this particular video we are going to find the buyers as a move away from a valid peak. So how do we validate a peak? A peak is validated by counting of levels. In this particular video, we are saying or defining a peak as a point that comes after 3 levels of rise on the H1 time frame. So in this case, we can see that we had this reversal point. To find a valid peak, we are going to say level 1 or a day of rise, then level 2 like that, or the second day of rise and then level 3 like that. So we now have 3 levels. This is H1 time frame where I am viewing the market from. We'll switch to the M15 time frame so that we may find the patterns that we are talking about, which are the M's and W's. So at this point, we had this zone. This is a valid peak because it's a reversal point that has occurred after 3 levels of rise have been issued. So from there, we can now see we had actually 3 levels to the downside to reach this particular point, which is this one. So I'm going to say this is a valid peak, right? Then we had level 1, level 2, and level 3. We had another valid peak at this point. Then from there, we had level 1, level 2, level 3, and an ugly W pattern with an extended second leg. Therefore, this was another valid turning point. We are not interested in trading these turning points, but to attain buyers away from those particular turning points. We had another one, level 1, level 2, level 3, meaning this was a valid peak, right? Valid peak comes after 3 levels of rise or drop. Then we had 1, 2, 3, and this becomes another valid peak, and we keep on doing that. 1, 2, 3, another valid peak, which is this one. Then from there we had 1, 2, 3, and another valid peak. We'll actually spend the whole day validating these peaks, but basically that is how you'll be validating these particular peaks. So we are now going to switch to the M15 time frame, which is the time frame where we will observe our M's and W's. So going on the M15 time frame, this is the first peak that we have. Actually, we have marked, and our M's and W's can as well have its legs in different sessions or different days. So in this case, we can see first leg, second leg, our entry at this point, that was entry away from a valid peak. Going from another peak to another peak, we can see this being a peak. We have first leg, second leg on this particular day, and it was actually a winning trade. Then from there, we have another valid peak, which is this one. But unfortunately, the market makers did not give us 2 legs that we expect whenever we find a valid peak. Then in this case, we had first leg and then second leg like that as a valid entry. Then another point, first leg, second leg as a valid point. Then from there, we had first leg, actually first leg, second leg, and probably we're going to be taken out and later make a re-entry. Then from there, another point, first leg, second leg, and the market went away. So as you can see from all these patterns that we have been talking about, whenever we trade them after valid peaks, they become more accurate. That is where we derived the name of this video. On that note, we come to the end of this video. See you on the next one, and don't forget to check out our free Telegram channel